Welcome to ValueVest Daily. Yesterday, the defense sector was just a sea of red. Today, it's a rocket ship. We're going to break down this massive, whiplash-inducing rebound that has every investor asking the same thing. What on earth just happened? All right, so here's the game plan. First, we're going to look at the wild market moves that caught everybody completely off guard. Then we'll dig into the massive catalyst that just flipped the script overnight. We're going to zero in on why the source material is pointing to Northrop Grumman as a potential value winner, look at the very real risks involved, and wrap it all up at the core question facing investors right now. So let's set the stage here. We are not talking about a gentle little wave. No, this was a full-blown market tsunami that hit the defense sector, and it happened, pretty much in the blink of an eye. You know, the speed of this change was just stunning. Just yesterday, shares in the big defense contractors were plummeting. Why? Because of threats to ban stock buybacks and crack down on executive pay. Then, a single social media post hits, and bam, today we're seeing this huge rally across the entire sector. A stock like Northrop Grumman, ticker NOC, is surging somewhere between 6 and 8%. It's a classic market whipsaw, right? A sharp move down, followed by an even sharper reversal. So what in the world was in that post? What kind of news actually has the power to completely reverse the fortunes of an entire industry in just a few hours? Well, that brings us to the catalyst itself. You see, at first, the news was all negative. The message was pretty clear. Stop the Wall Street handouts and start modernizing your factories. This really hit the legacy firms, the big established players, the hardest. The market saw it as a direct threat to their profits, and investors just rushed for the exits. That's what caused that initial dip we saw. But then came the other side of the coin, a total bombshell proposal. This wasn't just about discipline. It was about a massive expansion. A proposed 2027 defense budget of $1.5 trillion. That's up from $901 billion in 2026. Do the math. That's an increase of over 50%. All of a sudden, the market realized this wasn't just a crackdown. It was a mandate to invest in production on a truly historic scale. And this quote right here from the proposal itself, it just captures the entire feeling. It wasn't just some small incremental increase. The language they used, dream military, it signaled a completely transformative level of spending. For investors, this totally overshadowed any of the earlier fears about buybacks. It pointed to a massive long-term tailwind for the companies that could actually deliver. So this brings us right to the heart of the analysis. With a potential $1.5 trillion on the table, why does the source material single out Northrop Grumman specifically as a prime candidate for a value play? Well, the crucial point here is alignment. Northrop's core businesses are on the absolute cutting edge of modern defense. We're talking hypersonic missiles, advanced interceptors, next-gen space systems, and, of course, the B-21 Raider strategic bomber. These are not just legacy programs. They are the exact systems a dream military budget would be designed to accelerate and expand. And you know what? The momentum is already there. This isn't just speculation. Northrop has recently locked down over $1.4 billion in major contracts for critical systems, things like air and missile defense and advanced satellite tracking. This just goes to show they are already a trusted partner for the Pentagon's most important projects, with a proven backlog and deep, deep ties to the Department of Defense. And here, right here, is where the value part of the thesis really comes into focus. Just look at this table comparing Northrop to a typical hype stock. Check out the forward PE. That's a metric comparing a stock's price to its expected future earnings. The difference is just stark. While some tech or AI companies are trading at 50 times their future earnings or even higher, Northrop is sitting in a much more reasonable range, around 18 to 21. Its foundation isn't some speculative story. It's a proven backlog of government contracts focused on real, tangible production. The source also offers this key guideline for investors, and it's a good one. The idea isn't to chase a stock just because it's going up. That's FOMO, right? Fear of missing out. Instead, the opportunity being highlighted here is about recognizing when a powerful catalyst meets a company that has solid fundamentals and a reasonable price tag. It's about focusing on proven cash flow, not just internet memes or market hype. Okay, but let's be real. No investment idea is a sure thing. This kind of spending and this kind of market volatility, well, it comes with some pretty significant risks that we absolutely have to talk about. And here are the major hurdles. First and foremost, that $1.5 trillion budget, it's still just a proposal. It has to make it through Congress, and you can bet there's going to be an intense debate about the national debt. Then there's execution risk. I mean, programs this big are incredibly complex and can face delays. And as we literally just saw, the entire sector is super sensitive to policy changes, which can create these wild, volatile swings. So when you take all of this information, the huge catalysts, the value thesis, and all those risks, it all boils down to one central dilemma for anyone watching this whole thing unfold. And before we get to that final question, you know we have to say it, the essential disclaimer. This breakdown is for educational purposes only. This is not financial or tax advice. You should always do your own research and make decisions based on your own personal situation. And this is it. This is the ultimate question the source material leaves us with. It just frames the choice perfectly. On one hand, you have this massive potential catalyst that could supercharge a proven company like Northrop Grumman, which seems to offer real, tangible value. But on the other hand, you have that very real political and economic uncertainty that could just derail the entire thing. This is the ultimate question the source leaves us with, summarizing the core tension between a massive catalyst and the inherent political uncertainty. Please subscribe, like, and share ValueVest Daily for daily learning opportunities before you put your money to work. And one more thing, please put in a comment if you want us to deep dive into any specific high-risk/reward opportunities.